Richard Wyckoff. You've probably heard of his theory. You've probably seen all these complicated charts, but how do you actually make money from the Wyckoff theory? Right, so this video is going to go through exactly that in a very simplified manner. This is part one, and I'm going to do a series of videos on the Wyckoff theory and how you can actually make money as a funded trader using the techniques, the tactics. So in this particular video, I'm going to go through distribution schematic on Bitcoin using volume spread analysis. So make sure you stick around and watch until the end, and smash that like button, subscribe to the channel, and of course share the video. Enjoy. Right, so I'm going to cover Bitcoin distribution schematic, which came in between February 2021 and July 2021. So this was a very popular distribution schematic that had very clear evidence from a Wyckoff perspective that there was about to occur a markdown, which ended up becoming one of Bitcoin's most famous capitulation events, which occurred during this period here of the high of April 2021 to the lows of May and June of 2021. So for those who had experience in Wyckoff, were able to identify that this was beginning to look weak. So price during this period was beginning to look weak. And so what we're going to do in this video is we're going to make it really simple. We're going to analyze the distribution schematic that Wyckoff famously came up with. So we got phase A, B, C, D, and E. So during phase A, we have our preliminary supply and the buying climax. Now, after the buying climax, we of course get the automatic rally. So this is a usual occurrence. Now, after the automatic rally, we get the secondary test. So I've mapped these out during phase A already. All of these specific events occur during phase A. So once we've identified those, we can start to identify the trading range. So the trading range is identified by initially marking off the top of the buying climax, which occurs here during phase A, and we mark that out across the entire schematic. Then the next trading range goes right on the low of the automatic rally, and that goes across the trading range like so. And already we can see how these act as both resistance and support. Now, the final trading range, we are going to use this low here. This low here, this specific event that which occurs during phase B, straight after the secondary test. This marks the beginning of phase B, the sign of weakness. So this is now building up the cause of this shift, because we've had a buying climax, we've had very strong price action to the downside, and we've had increasing volume. As you can see, as price is moving lower, we have increasing volume. These are characteristics of a buying climax, okay? And as price moves higher, volume begins to decline. So even though price is moving higher, making higher lows, volume is not representative of that, okay? So there's a divergence here between price and volume. So moving on to phase B, during this phase of building the cause, what this schematic is now doing is engineering the new downtrend. So it's preparing for the new downtrend. And so smart money, aka the composite man, is beginning to close their long positions, and they're beginning to accumulate short positions in order to prepare for the next markdown phase. So the main purpose of phase B, to essentially absorb as much of the demand as possible. So they are absorbing as much demand as possible because they obviously going the opposite way. So right here, when we get the sign of weakness, it's a clear shift that supply is now greater than demand. We have now shifted where supply is now in control. So even though we can see price making higher lows and higher highs, just look at the volume. The volume during phase B is weak. It's not very strong. Now this then leads us to this next climax, which we call the upthrust. Could also be known as the upthrust after distribution. This is the spring or shakeout in a distribution trading range. It is the final test of demand. The upthrust or the upthrust after distribution is not required for a valid schematic, but in this case we have it because during the distribution schematic type 2, which we'll cover in another video, there's no upthrust, there's no UTAD. So during during phase B, what ends up happening is we get this break above the buying climax. Now, the next phase begins once price moves below the buying climax resistance. As we can see here, this occurred with increased volume to the downside. We get our first last point of supply. So this is the last test of the resistance that forms after a sign of weakness. This will be a very weak rally, very low spread. So the candles here are not as big as you can see this, for example, this Buzo candle to the downside. These bullish candles are just not as big. The volume is very low. So these are telltale signs that the last point of supply, essentially these are the last waves of distribution before the markdown begins. And we can now see that this capitulation candle, as we can see here, occurred with extreme high volume, and we can see the spread, the size of that candle. We can see now that demand was absorbed at these levels here at the $60,000 range for Bitcoin. So that leads us on to phase C. So this is referred to as the test. So phase C can be confirmed after the creation of an upthrust or an upthrust after distribution, so aka a UTAD. The upthrust is the opposite of a spring. If this was an accumulation schematic, this will be the spring, but when it comes to distribution, then we refer to it as the upthrust. So this occurs during phase C. So let's move that over here. That's it. So I've just corrected this. Now this is phase C now, where we have the upthrust. So during phase C, we can see that there are multiple last points of supply. These were reacting off this imbalance here. So this is where supply was a lot stronger. So this particular candle, if we mark off this fair value gap, we'll be able to see how smart money, aka the composite man, was once again absorbing demand, and they were closing their longs and increasing their short position. And we can see that very, very clearly around this fair value gap. So during phase D, the analysis is confirmed. Demand has completely been exhausted. So let's zoom into this. We get the final last points of supply. These are the last opportunities to get involved to the short side before the markdown. So supply can now be confirmed as the dominant force as price breaks below the support of the trading range. So as we remember the trading range, we have the automatic rally and the sign of weakness. The support begins to break, okay? And then we get the final retest of this support now turning into resistance right on the last point of supply. So any rallies during phase D are referred to as weak rallies, okay? These are meant to be shorted into. So we're meant to be shorting these rallies, and we can see that these rallies have very low volume compared to when price drops, we have an increase in volume. And we can see once again this final rally here, the one that retests the bottom of the trading range, has very low volume. There was multiple opportunities to go short here on Bitcoin, and this was in May 2021. There was two huge capitulation candles, as we can see. Now the final phase, phase E, this is when price is leaving the trading range. So phase E confirms the start of the markdown phase, aka the downtrend. So price breaks below the trading range, and we can see clearly that supply is in control. So the break below the trading range, which is this sign of weakness, confirms the unfolding markdown phase. So all of these rallies are a good opportunity to go short, okay? So that concludes this part. I hope you have found it valuable.